Instant pay, instant refunds, money is now instant. As of last week, with the rolling out of the Federal Reserve's FEDNOW instant payment programs. Now, a lot of people, I shared this with you, are opposed to this, including Florida Governor Ron DeSantis, who said this is going to be far too much government control, and we are going down a path to a United States cbdc, a centralized banking digital currency that will be controlled by the federal government. And he's saying this is far too much control. If he has anything to do with it, if he becomes the president of the United States, he will ban cbdc from taking place. However, let me get you caught up as to what they're saying are the benefits of what has rolled out with FedNow, as a lot of people don't realize some of the impacts, when these impacts are going to be taking place, and how it will directly affect you and your family. So I'm going to share with you some articles that literally just came out in the past 24 hours about what we're going to be seeing here very soon with FedNow and its rollout. Now, before we dive in though, do me a quick favor. If you appreciate the updates, keeping you up to speed on your money and everything taking place, instantly smash that like button for me. Hit subscribe to stay up to date. Why not? It's totally free. I'll keep you up to speed on everything. And with that being said though, let's go ahead and take a look at what's happening right now with FedNow and what you can expect to see with instant pay, instant refunds, as money is now instant. And also be sure to stick around to the end for more information on Ron DeSantis not wanting CBDC in the United States. All right, so link in the description below to this article that I said came out yesterday that says, what do we get with the Federal Reserve's FedNow instant payments? This is going to be covering the benefits, some of the concerns. We're going to go through all the details. Now it says, observations from the FinTech Snark Tank. Hooray, instant payments are here. To much fanfare, the Federal Reserve launched its new payment system, FedNow, last week. The new rail gives, or promises to give, consumers and businesses instant access to payments and money moved between financial accounts. What goodies should we expect to get from FedNow? According to Yahoo Finance, here it is. The system lets Americans pay for groceries instantly, businesses pay for their supplies, or people pay each other. It will be available 24 hours a day, every day of the year, with full access to funds immediately, but not quite. Now, this means literally that sometimes when you got to pay your bills, as you know, there's a delay. You got to pay it a couple days in advance. It'll now be instant. You can pay it the same day. Also, if you're waiting for direct deposit from your employer, no longer will there be a delay. The pay will come instantly. Now, 4 years after it announced its plans to build FedNow, the Federal Reserve nearly fell over backwards, congratulating itself over the launch. One Fed Reserve employee announced on LinkedIn that history was made, ignoring the facts that the clearinghouse, or the TCH, has offered real-time payments, RTP, for 6 years, and that Japan has had real-time payments since 1973. More dispassionate voices like Aaron McCoon, an expert partner at Brain & Company, explained. In the long lead up to this milestone, near real-time offering like same-day ACH, Zelle, and Venmo have gained significant traction. RTP isn't likely to replace any of those offerings. In fact, Zelle uses TCH RTP to settle between banks, and Venmo can take advantage of real-time transactions for funding and disbursement to and from your Venmo account. And in many situations, same-day ACH may be fast enough. Now, McCoon went on to say that once enough banks are connected to FedNow and or TCH RTP, real-time payments in the U.S. could be an attractive alternative to other existing payment options, particularly standard ACH, checks, low-value domestic wire transfers. However, the adoption of RTP will significantly vary by use case. Now, in order to get instant payments, banks have to offer them. So we are going to need to see all the banks get on board with this, and then we'll be able to have this instant access to funds. Once enough banks are connected is the key phase there. A survey of banks and credit unions by Cornerstone Advisors found that less than half of the banks and just 42% of credit unions expected to offer real-time payments by the end of this year. In fact, nearly a quarter of institutions aren't sure when they're going to be offering this. Another factor influencing the uptake of FedNow is the send versus receive aspect. Many of the early providers of the service plan to accept or receive real-time payments, but few of them are planning to turn on the send capabilities. If nobody sends instant payments, how can anyone receive them? This is a big issue, according to Peter Davey, SVP and Head of Product Innovations and Labs at TCH. Send-side products are what customers want. If I have a loss on my car or home, I can receive a payout from my insurance company in real time. But if I need to make payments to companies covering my car or my home repairs, how do I get money to them in real time? They'll want immediate use of the funds to service me. Now, also one of the big concerns is that faster payments equals faster fraud. Another dispassionate voice in real-time payments discussion is Sarah Senguin, a principal advisor on fraud and identity risks at Alloy. According to Seguin, faster payments means faster fraud. Just like other new technologies that have emerged in the financial services industry over the past several years, fraudsters will continue to adapt and figure out new ways to exploit these new technologies. Pretending to be someone else, often a colleague or a senior executive at your company, fraudsters send messages and instruct you to send a payment to them. Their growing sophistication in hacking email accounts and gathering data from social media makes it difficult to spot and prevent a fraudulent behavior. So when are we going to be seeing the benefits from FEDNOW? As I mentioned, all the banks need to get on board, and it says for all the hype surrounding FEDNOW, the reality is that consumers won't get a whole lot of the new payment rail that they don't already get in the near term, at least. With many of the largest banks already on the TCH platform, real-time payments volumes on that network will dwarf FEDNOW's volume for a good number of years. Slower adoption on the send side of the equation and increasing fraud will slow down the rollout of new instant payment use cases. The impact of FEDNOW will depend on the following factors. Banks' commitments to payments as a strategic differentiator. Many community banks see themselves as commercial lenders and don't see payments as key components of their strategy. It may take a while, but these banks will have to compete on commercial banking, payments, and treasury management in order to grow their lending businesses. Use case evolution. There are many possible use cases for instant payments. The question about which platform, TCH or FEDNOW, will grow faster is moot. The important question is which platform will be better for any particular use case, and whether or not the use case generates incremental revenue for the banks or not. Tech vendor support. Community-based financial institutions will need to rely on their core and digital platform vendors for FEDNOW deployment and support. How good will that support be? How well will the vendors be able to help their banks and credit union clients build solid business cases for instant payments? And fraud prevention management. Bankers are risk-averse by nature, and the fraud threat of real-time payments will cause banks to wait and see before building out the send side of the faster payments. A newly formed consortium called SardineX to share fraud data between banks, card networks, new payment processors, and fintech may help accelerate the adoption of FEDNOW. So this article says that there's a lot of these services that are already offered through things like Venmo and PayPal. However, not quite. That is not real instant payment. In this case now with FEDNOW, this is going to be instant access, but they're also saying that this could be a major issue because this could be instant fraud, and it could be very similar to a wire that once the money is out there, it's gone. Now, also, in addition to that, one of the major concerns that have been vocalized is this. Some market participants have raised concern that FEDNOW could supercharge a potential bank run by facilitating fast outflows from financial institutions, a fear that was amplified after the failure of the Silicon Valley Bank earlier this year. So in other words, if there is a run on the bank, the money would go out instantly. Let me know your thoughts in the comments down below. Now, for more on the digital currency that a lot of people are concerned about, the CBDC, we're hearing that is on the way and will likely come to fruition before the year 2030, be sure to check out this video right here as I covered the latest details after FEDNOW was released just last week. But with that being said, you guys, I will keep you up to date. You can expect that as more banks begin to adopt this into their system, that money will start to arrive instantly and go out instantly, as we have finally updated our archaic banking system in the year 2023. But with that being said, you guys, thank you so much for joining me, and I will catch you in the next video. Take care. God bless. This is Steve.